Sure, sounds good. So first off, good morning, everybody. Thank you so much for being here. Josh, 2 degrees, thanks for having me on board. Uh, Totally grateful and incredibly humbled, to be honest with you. As you can see on my screen this week, I didn't even realize who was on stream this week, and I was like, holy shit, this is pretty crazy because you got Parallels there, Colin Jones is there, Sign of Time, all amazing traders and uh, all around good people just from my interactions with them. So a huge week this week, in my opinion, with the live stream schedule. So thank you for having me. Um, in the previous live stream I talked about how I started in like 2017 with Bitcoin and pot stocks in Canada just before they got legalized. So that was kind of my gateway into trading. Um, Needless to say, I was a XRP enthusiast back then. Going down the rabbit hole of conspiracy theories. XRP is gonna, rule the world, and having fun with the Bearable Guy 123 with the 589 prediction. It's just so much craziness back then. I knew nothing about charts. I was just going off of all this crazy shit that I was seeing on crypto Twitter. So um, needless to say, 589 did not happen, and I watched my assets go from like 90%. I watched my assets go from like I was like 5, 6x up to 90% down by the time 2018 lows hit. So I had no clue what I was doing, and that was like really depressed. So I learned from that, and then in the following cycle, that's when I started my journey into trading analysis. So technical analysis basically, and just did what probably everyone else here has done, is just studied trend lines, Fibonacci, support and resistance, right? And that was pretty much it. And of course, nothing works, right? So you're just kind of buying on hype and things like that. I would say I probably started entering into futures during the crypto bear market, like with this cycle, because I was just bored, and I mean there was nothing to do with crypto. So I started looking into trading the Nasdaq. Um, so I started learning about ICT. The 2022 mentorship model was basically my start, and I kind of put my own, like I put a spin on that 2022 model. I made it my own. Kind of created my own model with it. I still trade it from time to time or track it just to verify the data. I'm a big data guy. I like to collect as much as I can and then go back on it. But from there, yeah, I started going into the FX market because I thought, like, why not? There's a lot more pairs to trade from. So I thought more pairs means more opportunity, but I soon realized that more pairs does not actually, like, it may provide more opportunity, but it doesn't mean you're going to get more reward. So I kept losing a lot, trying to learn from other gurus or whatever. Just to, like, I'm always trying to learn. I'm always like, even if I have a core model, if I have downtime, and if something kind of sticks out, like, I'll start studying it. It's just who I am. But from there, I found a PDF from Ash Trades and another trader named Tyler, based off the unicorn model. And obviously the unicorn is very similar to that 2022 mentorship model. So it was easy for me to kind of navigate to that. And then with Ash Trades, it just, he has been my mentor. I will always say this. I joined up with him in early 2024. Like, that's when I heard about him. And there was concepts I actually did not even know about, right? Like, if we're talking about, like, how to form a bias, or what a change in state of delivery is, and just even how to simplify the approach, trading windows. I mean, things that I look at now and I'm like, wow, it's not too advanced, but because I didn't know, and I didn't have someone kind of like coaching me, like I didn't have anyone in my family or any friends, nobody I know does this, so I'm kind of just flying off the seat of my pants, right? So um, I learned a lot from Ash Trades. I studied every single day, like night and day. You know, attended every sort of live stream there was, never missed a single one. Like I was one of those kind of people. Um, and slowly but surely, my progress started to provide results. I started to learn more about who I was as a trader. There was a 2190 challenge where I didn't even know what the hell that was, and I learned that 21 days to break a habit or form a new habit, and then 90 days if you can continue with that, eventually it'll create that new lifestyle for you. So inside Unicorn University, we've done that first one I did. Then the second time around, I ran it myself. I just volunteered to do it because I thought there was just such amazing value, and I could tell that I was learning a lot about myself as a trader. So we did it a second time around, and now we're doing it a third time around. And it's amazing to see that even in my third round, like I'm still making changes. I'm still adapting. I'm still learning. So whereas I started trading with the C2 Unicorn, I've started to now trade 2-minute time frame IFEGs, which I refer to as the EMC model, uh, which we it's basically an ode to Eat More Chicken, right? So who's also an incredible trader. You need to get this guy on a live stream schedule one day. Hopefully he'll say yes. But he's a really
I've
really
been
cool dude.
asking him. I've been asking him. I mean, hopefully, if everyone tags him in the chat, maybe he'll wake up to realize it. Everyone tag Eat More Chicken.
Yeah, he's such a good dude, and I think that's part of my journey is while I've been studying off others, meeting amazing traders, I've also tried to just connect with people who are not trying to be influencers or trying to create like a social profile or whatever. Just because like I'm just like anybody else. I'm just a regular dude. So I love communicating with people. If people need help, I love to help. So anyone that knows me knows, like, I'll give you 100% in the DMs. Like, it's just that's who I am, right? I'm always going to try to help others where I can, or just talk shop because I'm so passionate about trading. I love trading, so it's a natural fit. Um, but yeah, so and then now here we are. So today, let's see what the plan is. I got a deck here. Let me find it. Oh, here we go.
That's awesome. I
So,
appreciate you again. Let's
no problem.
go.
Yeah, yeah,
Bro,
and
I
obviously,
get so excited when everyone like basically just hops on the live stream and has like basically like a whole like PowerPoint or like a PDF with that. It means so much to me because just it shows the amount of like intention that you guys also care about everybody else in the audience, right? So it's like I always really, really appreciate that. So, everyone in the chat, please drop a
thanks,
heart
man.
because this
I
is
appreciate
this
that.
is this is big time stuff. When traders are out here able to just more or less trade, back test, and do their own refinement, and they're taking out their time of their day to basically provide PDFs and or presentation to make things clearer. Like they deserve a heart. So, Kira, definitely go and check out the chat. This is it's all love in here. So we appreciate you a ton with that.
Appreciate that, man. Thank you so much. And yeah, thank you once again to everybody here. I know I haven't said good morning specifically to each and every one of you, but good morning to all of you collectively. I'm just quickly kind of going back through the chat to make sure I haven't missed anything. Wow, that's a lot of hits here. Let's just see. Oh, there we go. I just saw a Kira from Death Note GIF, the crazy one. Love it. Yeah, once again, like appreciate everybody. I'm always just truly humbled, to be honest with you, because I was looking at when I joined Unicorn University, like in the actual the premium Discord where everything kind of is elevated, and it was literally 10 months ago. And to think like 10 months ago where I was to where I am now is just insane because your life can change so fast if you can just align your vibration and your mindset and stick with one thing, right? Like focus on one setup. Focus on one set of rules. So with that being said, yeah, I'm a futures trader. I'm also a crypto degen. And today, here's our agenda. We are going to be discussing the science of what 2RR a day can actually achieve for you. We're going to review some of the futures charts with NQ, ES, GC, and CL. We'll get into Bitcoin. I'll also go through a showcase of the EMC model, which is that 2-minute IFEG stat map combo. I've really gravitated towards this recently, and I'll talk more about that obviously when we get there. And then obviously with Q&A, we can do Q&A after, but if you got questions while I'm rapping here, like just drop it in the chat and I'll try my best to keep going back and forth to answer any questions. And Josh, feel free to cut me off at any time if for whatever reason, okay? Just do it. I won't be offended or anything like that.
No, absolutely, brother. I appreciate that all. And there's definitely going to be a bunch of questions in the chat, so I'll be able to help out where I can. And then, in the case that I don't know the answer specifically, I would love to just pass it out to you the moment that, you kind of get some free time. But definitely get into your flow. This is all you now, so the show's yours, my man.
Thanks, mate. Where is my... It's going to open up my deck. 1 second. Okay, so science of what 2RR a day can do for you. Often in trading, we think that we need to trade more. We think that we need to trade 4, or 2, 3, 4, 5, 6, 7 times a day to try to maximize our RR, thinking that it will help us at the end of the month. But if we do some basic math, the idea of 2RR a day and compounding is absolutely insane. There was a trader on Twitter that I follow. I'll shout him out. Lethality, solid trader. I think he studied with Sniper, but I saw a tweet he posted a while ago, and it was about how using the classic penny example, and that if you double it for 30 days, that you would end up with 5.3 million in terms of that value, and that alone is like absolutely blew my mind and got my wheels turning in my head, because I thought, well, what does that, like, obviously I can't compound a penny every single day, because at some point the number is just too high. But how does that translate into futures trading and like copy trading, because that is more realistic. So I thought, like, what if I just aim for 2 hour a day? Like, what does that look like? So basic math shows us that there's about 20 trading days in a month. Now, I'm not factoring in news. I'm not factoring in bank holidays. Okay, so obviously that stuff is logical, right? But hypothetically speaking, 20 trading days, 2 hour a day. Obviously, if this is given with there's no losses, but that would equate to 40 RR. Okay, that alone is absolutely insane. Okay, now, like I said, of course, that doesn't account for losses or real execution, but it did get me thinking, and this is a big reason why I started to really dedicate some more time into a lower time frame model that has been very, very successful for me, at least. And a lot of it was inspired through Eat More Chicken, to be honest with you, and just that man's trading just inspired me to a whole different level. So I know with the 5-minute CT unicorn, which has been my core model for like I said, for at least a year. The issue I have with it is, I don't get trades every single day. I might end a month +8 or +5 or +10, sometimes +12. But this month, I'm sitting at 4 trades at a +2, and we're pretty much at the last week of the month. And if I'm getting a +2, like I'm barely taking any trades in a month. So it got me thinking, like, how do I get to 2 hour a day? Because 2 hour a day is not, like, if you know what you're doing, 2 hour a day isn't that hard to do, really. Of course, there's variables at play, but the reality is, like, if you have a solid game plan, you can totally get 2R, and 2R is enough. So this is why I started trying out the EMC model, and there's a huge focus with the stat map indicator, as well as the Dodgy DDIFG indicator, because this model does present opportunities every single day. And using that IFVG entry trigger, you can tighten up your entries, because you can really catch them right at those key levels. So I made an example. If I paper traded like a clean GC setup, had one trade, 2R done, and that's like by 10 a.m. Imagine your day's over by 10 a.m. Unbelievable. We always think we want to do more, but sometimes less is more, right? So the things I started to think about beyond that then were, because obviously you've got to be realistic, right? Like, what happens if your first trade is a loss? Do you keep trading until you hit 2R? What if the first trade is a loss, the second trade is a win, and now you're at +1? Do you keep pushing or do you walk away? Another scenario that kind of crossed my mind was like, what if you go with one loss, then you take a second trade and it's another loss? Now you're -2. Do you keep pressing? Do you keep going until you break even, until you push for green? Like, what do you do? So these are kinds of the questions I had, thinking beyond the euphoria of 2R a day. And I think a lot of this then revolves around building like a risk framework, as I mentioned there, and having a model that then makes sense, right? Like, you have to basically show up to the market every day. You got to practice. You got to look at the chart. You got to either paper trade it, live trade it. What I've been doing is using a combination of paper trading, challenge account trading, just to kind of make it real, because I can't catch everything, but I want to catch all the data. That way, if I build up all my data for the month, I can then start to optimize it in real time. And that's what I've been doing. And I've been having insane results, to be honest with you, because I've been doing it. So let's continue with the science of 2R. Okay. Let's pull this up here. Okay. So everybody can still see this, right? Like, it's not too small or anything. Just want to make sure.
Absolutely, I can see it perfectly. If
Okay.
anyone else wants to also put in
Awesome.
some points, if this is not, big enough, maybe some people have a phone. So if you do want to zoom in, and I know that it might not hurt anyone, but it does look good on a laptop.
Amazing. Thanks for confirming. Okay, so if we're compounding with 2R a day, what does this look like? And I have deemed this as an unrealistic view, because the reality is no trader gets 100%. It's just impossible, at least in my opinion. So let's make an assumption. You have 20 trading days in a month. Your goal is 2R a day. You risk $500 on a trade. So you get one trade per day. Like I said, no losses. Ideal scenario. We know that that's not real. But 2R a day, 2 times 500 equals $1,000 in profit a day. Okay, so $1,000 a day multiplied by 20 days equals $20,000. Now, the monthly breakdown of 2R a day is 40R a month, like I mentioned earlier. But 40R a month with a $500 risk per trade, like I said, is $20,000 in profit. Now, here's where we get crazy, because what if we were copy trading? And that's the beauty of futures trading. This is what really, really piqued my interest when I started learning off Ash Trades, because I saw him, I think, pass 10 accounts in one of those news events with the one shot, one kill method that he was doing. A little different than what day trading realtor is doing, but I watched him pass 10 accounts live, like in a matter of like minutes, and that blew my mind. So the crazy thing about this is, if you start to compound that, like, your RR across multiple accounts, this is when things get amazing. Because with one account, yes, that's $20,000 a month. With two accounts, that's 40,000. With three accounts, that's 60,000. We see a lot of big time traders that are on Twitter, and I won't say the names, but I think we all know who these people are, and they're incredible traders. But when they're compounding, 3 accounts, 5 accounts, 10 accounts, 20 accounts, like, and taking base hits with big, like, if they're able to, instead of using $500 a trade, maybe they're using like $1,000 or $2,000 a trade, but then they've copy traded that across many, many accounts. Like, even with a 50% win rate, you're net positive every month, right? So when you think of it that way, it's absolutely insane what's actually probable. One of the biggest headaches or the biggest challenges, though, is we are all greedy by human nature and human design. We're all chasing like success immediately. We all want $20,000 a month now. We don't want to wait for the month to end to get $20,000. We want it like in one trade, right? Every time we enter a trade, we want that shit to just go straight to TP. You want zero drawdown. Like that's what we all want, right? So greed, definitely, exactly, Josh. Greed. You have to understand what greed means to you. You only will understand that when you feel max pain. I felt max pain, as I mentioned in a previous live stream, when I was taking a futures trade with a Matic setup back in 2021, I think, and I lost 50 grand, man. Like I lost 50 grand in like minutes, and I was so broken up about it because I was greedy. So that day, that's what taught me a lesson, and that lesson cost me $50,000. Okay, so yeah, exactly, Storm, crypto. But what that has also done for me is understand my risk, because I know what that feels like now, right? So I've pushed those boundaries. Now, I'm not saying I want you to lose $50,000. I want you to experience max pain in horrible ways. That's not where I'm going with this. I'm just saying you're not going to truly understand it unless you go through some form of that, whatever that looks like. Okay. So the reality check is this doesn't include the losses or the missed trades or the break even, dude. This is just a framework to understand the power and the consistency about daily compounding and using your RR execution and discipline as being the key to this whole thing, right? So if you can control yourself, the you versus you battle, every single day when you get to RR, stop trading. Or if you're going to continue trading, just paper trade it. So you get that that itch out of you, right? Now, if we take a realistic approach, I think on average, 60% is probably something most of us will aim for. At least for myself, I know for myself, if I'm about 60%, that's a really good month. Obviously, if you hit like 70%, that's amazing. If I'm below 60, that means I've probably made some mistakes. And this is just me based off my own data. When I've done my monthly reviews or my weekly reviews. Also big shout out to It's Algo. He has posted amazing weekly review, monthly review, kind of breakdowns or questionnaires to ask yourself. I use these things. It's a lot of work, but you don't have to do everything. But check out that dude's Twitter. He's such a big deal. He's such a good dude too. But check him out. He's got the templates there. But let's take the 60% win rate perspective. Okay, so that's 20 trading days in a month, one trade per day. We risk $500 per trade. Win rate is 60%. So if we get 2R, that's 1,000. If we get a loss, that's minus 500. Okay, so the monthly performance at 60% win rate is out of 20 trades is you're looking at 12 wins. So 12 wins equals $12,000, right? At $1,000 a win. 40% is 8 losses. So 8 losses multiplied by 500 is 4,000. So even with a 60% win rate, you're up $8,000, and that's 16 RR, taking 2R per trade. Okay, now you got to have strict risk management here. You have to have complete control over your emotional FOMO or panic and things like that, right? So if you now scale this with copy trading, though, so one account is 8,000, 2 accounts is 16,000, 3 accounts is 24,000, and that's just with the 60% win rate, trading 2RR per trade. Is this something you think you can do? It is. Drop a 1 in that chat if you think you can do this. Like, I challenge you.
I want to make a big point about this. I kind of mentioned a little bit about this just above, right? A lot of people are just scared of math. And I don't know how else to just not sugarcoat this, right? And the sooner that individuals are able to just really just grab onto just saying like, okay, well, I may be fearful of math. I'm not necessarily the best at math, maybe from their own high school, college, or any type of educational, time. Like when we're dealing with math and trading, specifically stop loss, specifically entry, like you gotta just be comfortable with your own numbers. And like I just want individuals to hear this. It's like if you are not comfortable with math, I tell you right now, that is what's holding you back. If you have not ran your own numbers, if you've not ran your own projections, that is something that you should absolutely be telling yourself and asking yourself the question of why you have not done it as of right now. Because if it's fear, then you need to just get over that fear. Because everybody knows that once you understand the math, it's just now the routine process. And you get the math out of the way, you eliminate that discomfort because now you've being able to just attack it right at its core. And then that's the key to just being able to say, okay, well, all the other stuff has been figured out. Now I just really need to just hone in on my model, backtest my model. And the moment you can align your math with your routine process, that is such a powerful point. So I just really want to just stress that, right? Extremely, extremely important. If you are uncomfortable with math, please ask someone that is. Or if you are not willing to ask, then go and learn from YouTube. Go and learn from other individuals that show the math and the raw reality of trading. I know that Day Train Realtor, he also went in and talked about the math and the real life of prop firms. And it's like you bring this up again. I thank you so much because I just hope that this can just be a passionate wake up call for anybody that's in the audience that is not comfortable with math. And specifically, it's literally just basic math. It's addition and multiplication. No one's telling you to do algebra. No one's telling you to do any type of, calculus. So it's like, just be comfortable, pull up a freaking spreadsheet and just get involved with math. Like it's so important. And hopefully that you guys can hear the honesty in my statement.
Yeah, well said, man. Very, very wise words. I think one of the key takeaways too is just ask for help. Like this is such a lonely business, and there's so many good people willing to help, willing to share, and not asking for anything in return. So if you can find those kinds of people, I mean, those are the kinds of people you want to keep around you in your trading journey. I've come across all walks of life, and I think when you just align your own vibration with what you want, I think like you'll attract that back to you, right? Like attracts like. So if you need help, just ask for it. A lot of people, especially even in the 2 degrees community. I know there's a lot of good people here. I see it. Um, just ask. I failed math. I flunked out of math. I'm not gonna lie, man. Like grade 10, I barely passed math in grade 10. 50%. I think the my teacher gave me a 50% on the exam, just enough to pass grade 10, or grade 10 math, right? So if I failed, I would have had to go through summer school. But needless to say, I never took math ever again. But then later in life, I realized even just basic math is. So definitely agree. Okay, so going back to the 60% win rate, the key takeaways now with this, even with a 60% win rate, you're compounding your RR effectively. Your risk reward edge 2 to 1 does all the heavy lifting. Having a system, having discipline, and having selectivity will equal scalable results. So, like I said, I challenge you to stick to one model. Maybe do it on a challenge account to try it out, right? Get one of those challenge account deals. There's tons of them. They're everywhere. And try this. See where you end up in a month. Okay, so the next thing we're going to talk about, unless anyone has any questions about all that stuff, but I think we've talked it to the ground, and it's always a good reminder. Oh, EMC's here. What's up? He's in a Chick-fil-A meeting. Wow. Honestly, man, I think last night he was working and then he took a break and he got pinged with the DD indicator and then he just took a trade. And I was watching the same trade during Asia last night. And he ends up scoring this win. And then he's like, okay, I got to go back to work. I was like, man, this dude is awesome. If we could all do that, that would be so, so crazy, man. Just to pop in, pop out. Like I said, man, true inspiration. All right, so trading model. We're going to jump straight into this thing. So the EMC model, what is this thing? So a quick background about this thing. So I think in December, Lumi Traders, her name is Dasha. I think I'm pronouncing that right. I think she had shared a PDF in the StatMap community, how she uses the StatMap, and one of the last type of model she had at this on this PDF, it was the last 2 pages was a 2-minute model setup, and I remember EMC, myself, and there was another trader that we know inside Unicorn University. I know the three of us were like experimenting with this thing. So I was still very, very involved with my core model, which is the C2 Unicorn, and there was a lot of trades, and it was keeping me busy. So I stopped trading the EMC model, as I'm calling it now, only because I couldn't give it the time that I think I needed to give it. There's pieces that were missing for me that I just couldn't put together. But I know when Eat More Chicken basically put his head down, went into the lab, and came back and was showing everybody what he's been up to. That's when my like the alignment in terms of where I was as a trader with what he was presenting was enough for me to go, okay, I need to really give this some time because the RR is just you can't ignore it. And if someone is getting consistent payouts, uh, to me, I was like, I can learn off someone who's like that, and I already know this person, so I should definitely be trying to study what they're doing. So I literally put my head down and started doing this. Now, I will say, I ran into massive amounts of roadblocks and challenges, and I had questions. And the one thing that changed the whole thing for me was the D. That indicator, which is that dodgy indicator, when that thing came out, it literally filtered out all of the garbage that I was trying to figure out how to filter out in the first place, except I didn't have an indicator like that to use. So I was trying to use other concepts, right? Like volume delta or, geez, what else did I use? Other sorts of manipulation ranges. But the second I started adding the DD indicator into the mix, I like I said, it filtered out all the garbage. I was totally blown away by this thing. And to be honest, this is a massive part to the model in how I trade it, and I know with how other people. So, what are my criteria? Well, my criteria always start with time. So, based off the data that I've been collecting, I've gone about 58 trades documented for this month. See if I can show you guys. So I have this huge spreadsheet that I've just been adding to. You can see it's just endless. It just keeps going. Now I've optimized it as the days go by. I've tried to just show up or review every session that is applicable. So that's like and it's based off of a 4-hour candle, right? So it's because we're using these stat map levels, which I'll talk about in a sec. But I just started documenting, the kill zones. So 6 to 10, 10 to 2, and then I was even looking at 2 to 6 for a little bit, but I know 2 to 6 is not feasible for me. And then I started looking at Asia, 6 to 10. So I tried to document as much as I could here. Some of them are paper trades, some of them are challenge account trades, and some of them are like backtested trades just because I missed the session, but then I'll just review the session. And because the trading is like the criteria is so mechanical, you can catch these things in real time. They're pretty clear. So over time, I've optimized the strategy. I've optimized the settings to the indicator. I've, like I said, by trial and error, you start to put things together. And you only know this when you start to collect the data. So what I started doing was collecting the data to filter out like when is the best time to trade? What assets are the best to trade? What, am I doing better trading one asset or the other? These are kinds of questions I had. And even with the settings, right? Like when I had the settings very, we'll just say very loose, very flexible, there was a lot of signals that come through, and it attributed to some of the losses I took. So I tightened up or made the settings a little more conservative. And what that did was it limited the volume of signals that would fire off, and it would only signal like quality type entry points. Now, the DDIFG indicator is basically functioning off of the size of the IFVG for the most part, from what I gather. So I'll walk through my settings in a bit, but that's kind of how I started to optimize things in real time. And the results are nuts. Like I had shared some results yesterday on inside Unicorn University, but I think I was sitting at like, if I was just trading from 8:30 to 2 p.m., I think my results are like, I'm at like 40 RR. And these are all like I said, these are all either paper trades, challenge count trades, or slightly back-tested trades. I've tried my best to share all of those setups inside my thread in Unicorn University as well. So I just want to put that out there. It's all there. You can see everything. And as time has moved forward throughout this month, I've been able to make it more mechanical. Obviously when you look at something every single day, or you're looking for specific things every single day, they start to become like clockwork for you. You start to increase like your muscle memory for that trading IQ component. And I'm sure other people can either relate to this, or if you can't, I hope that one day you do. So what I've learned is trading Asia is not good for me. Most of my losses have come from Asia, and this is, like I said, through optimization of the data. So I know my key trading window is 8:30 to 10, which is that 6 to 10 4-hour OHLC stat map window, and then the next one is 10 to 2. Now, the crazy thing about this is you can trade this, at least I've been trading this through news. I have not worried a single thing. I even took a trade, and I was trading this with the crew, the EMC crew, on a bank holiday that just passed, and we tore up one of the trades. Like we secured a trade even on a bank holiday. So yeah, DDIFG is 100% built different, and like I said, it filtered out a lot of the garbage that I just didn't know how to filter out. Just adding one indicator and adjusting some settings. That indicator is so powerful. So time frame wise, actually, let's go to tickers. So the tickers, I'm focusing on our NQ, GC, and CL. I've left out ES just because NQ and ES are like basically the same thing, and I'm trying to take a less is more approach. I feel like if I had one more asset, it overcomplicates things for myself. It might not overcomplicate something for you, but for me it does. So with that being said, I just stuck to the three. And the beauty of this is we know that NQ and CL can potentially be inversely correlated. And then we also know that sometimes GC can be inversely correlated. Not all the time, but we can see it. But I think CL and NQ have a better inverse correlation for the most part. Not always, but you do see that. So I thought it was good to just kind of keep these three, and these are the major ones, right? So in terms of the time frame, like how am I structuring this model? The criteria is basically just like everything I've studied off of Ash Trades, man. Like that foundation of the unicorn. I'm looking for a higher time frame bias, and I want that higher time frame bias to then, or then I want the 15-minute or the MTF POI to align with my higher time frame. And then once that lines up, I want to be executing on the 2-minute, okay, with that signal. So, for example, if I have a H4 bias of going long, then on the 15-minute during this trading window, I need to make sure that I'm seeing price enter either a bullish FEG or swinging below like a swing low, right? Like an ERL. Once I start seeing that happen, I can jump to the 2-minute. And then from there, I need to start to look to see if that OHLC stat map is there, right? So here we go. H4 ERL to IRL, 15-minute POI. Third step, I'm looking at the OHLC stat map, premium discount levels or the ranges. Okay. I've added something else here, which is the average daily range, but I'd like to use the average New York, which I'll also show. It's not a mandatory thing. And I'm still kind of feeling this out a bit more, but it is like a point of confidence, right? Because it's such a key manipulation level that sometimes you'll see this overlap with the price action of the POI and the stat map, and that's when I see that happen, I get really, really excited. And then, of course, we're waiting for that 2-minute IFEG signal, right? Sometimes you're setting this whole thing up, everything lines up, and step 5 does not add up, does not happen. I will this is where, as a trader, I've had to even test my own patience here, but I have to stay out of the trade, even if I start seeing it going the right way, because I'm this is part of what it takes to be sticking to your rules, because the rules are what keep you safe. The rules are based off of logic, not emotions. But if I was jumping into that trade without seeing that confirmation, now I'm not trading based off of logic anymore. I'm trading off of emotions. So this is literally the criteria. It is literally this 4 steps. This 4th step is an optional step, but so basically there's 4 steps. I've put 5, but there's basically 4. Does that make sense to everybody? And this is the foundation of everything I studied off of Ash Trades. I owe that man so much, because the things he's taught me to do, he's taught me how to fish, right? He didn't just give me the fish, he taught me how to fish. And all that info was out there for everybody for free. And then when you start using, badass 2 degrees indicators, you can start to amp up your trading and put things together. And this is just what I've done. And this is what has worked for me. It took me a time. Actually, I'll also say, even when I first started using the stat map, for example, I think this stat map indicator is a phenomenal indicator, but I had a hard time with this thing when it first came out, and I saw everyone else making it work, but I myself could not make it work for some reason. And it's taken me a lot of time to kind of figure out how I want to do it. And I'll show you how to do it. We'll quickly go to the indicators next, which is what I'm using. So I'm using 2 degrees tools. These 2 up here are premium ones. You can get them through the elite package, or you can get them individually. So it's the OHLC stat map. I'm also using the DD IFEG indicator, and there's a free indicator that I'm using called Judas daily range indicator, and I'm using that to get those average New York range levels. I'm still kind of going back and forth between the premium average range levels indicator, which Day Trading Realtor and 2 degrees and Flux, shout out to those guys, to what they put together. And I do use that indicator, my unicorn setup, but I'm kind of trialing out using the older free version of the range average range levels, to see how they perform and how they do, because I have noticed some good respect with what I'm looking for. So I'm still using this right now. And if you hear any pings, there's just my alarm's going off. We were joking about that earlier.
True trader. True trader. That's how you know you're a true
Yeah.
trader right there.
Alarms on
You're alert
alarms.
for setting up.
Yeah, guy, the DD indicator is standalone. It's a collab between 2 degrees and Dodgy. I think Dodgy did a live stream a while back, which almost broke Discord. I think there was 1,000 people in that live stream. Is that right, Josh? It was 1,000, or was it 1,500? It was nuts. There you go.
We
So
kept having to buy Discord boost. That was absolutely one of the biggest live
yeah,
streams to date that I have seen across our, ICT and, price
yeah,
action community. So that was
yeah,
absolutely a diabolical stream.
yeah. Shout out Dodgy, man, because that yeah, I've never seen anything like that before. So credit to Dodgy, credit to 2 degrees, credit to you, Josh. In terms of the trading view tools that I use, these are just the free stuff. I like to use the ICT Kill Zones toolkit. This just gives me the Asia, London, and New York session levels, like the highs, the lows, and the mean. I personally like to use the full range of the session instead of just using like a specific kill zone, like 2 to 5 a.m. or Asia would be like, 7 to 11 or 8 to 11. I like to use the entire range until it overlaps to measure out my session ranges and the mean. I also use this other indicator called the fair value gap by Anch. The thing is, like, I use this primarily because a lot of times if I've zoomed out of a chart, I can't see how, like, those super small fair value gaps. And I think there's nothing wrong with having something just to like show you that something's there in case your eye misses it. Because not all of us the best eyesight. And even if you do have really good eyesight, like, you're still gonna miss it because it's so small. But this indicator will pick it up, and then that can be the difference between you getting the bias right or you getting the bias wrong, and that could affect your entire trade. So very, very important. And then I also use Notion, like I showed you before, backtesting journals, use a daily schedule with my routine in there, and then my trading journal. Without this, nothing is possible. Okay, if you're trading with no plan, with no data, at some point you are going to go into some sort of a like losing streak, and that's when you're going to start to question yourself and question what you're doing. And at that point, if you do have all this, you will go back to this, and that will give you the confidence to tell you to keep going forward because it works. You've got data to prove it. If you don't have this, you're going to be in a huge dilemma where you're going to have to start asking yourself, like, does this model actually work? Or what am I doing wrong? And you'll have nothing to go back on. So take the time every day and just track what's going on. Like, most of us have a trading window of like 2 to 4 hours, maybe 5 hours, right? Sure, a lot can happen in 5 hours, but just document it, right? Even if you can't document it in real time, make sure you go back later that day and document it. I like to document during the day and then review at night. Take like 30 minutes and just do a quick review. I feel like by getting in those extra reps, it's going to help your trading IQ increase. It's going to just help you as a trader overall. So I highly recommend to start building your data, start collecting the trading journal, like your trades, track those things, and create yourself like a schedule and a routine that you can adhere to. Okay?
Do you mind if I ask you a question,
Sure,
Kira?
man. Go for it.
What was the turning point? Because I know that this is like, let's call it like, it's almost like a taboo in the industry where it's like people are like, oh, journaling is, great, journaling is essential. And then there's some people that, again, they don't. So it's like, what was the turning point for you? And when you realized that, like, okay, I have to journal because if I don't journal, then I'm just missing out on so many insights. What was that turning point for you?
So I started to actually track things back in 2023 with that 2022 model. That's when I first started to do it. But as time evolves, like I said, you optimize how you collect data, you optimize your layout, you optimize even the model you're trading, right? So for me, a lot of my success has come from trading a C2 unicorn, and I literally started to implement that C2 fractal, the T trades fractal indicator. I would say in December, and credit to Day Trading Realtor because I was basically studying off of him with that. That was my introduction, was through him. I didn't even know it was a T trades thing, to be honest with you. I just thought T trades was a teacher on YouTube because he has all those crazy. He has a crazy collection of ICT videos that are pretty much what everyone goes to, even if they don't realize it. He's got the best ones, and I didn't even realize it was his. And it was a lot of his concepts that, in terms of where it was coming from. Um, so I think as from December till about maybe March, April, like that's when things really started to evolve into where I'm at now. Um, So I'd say that was the turning point, but you have to have a starting point, right? So my starting point was in 2023 with the 2022 mentorship model and how I kind of created my own model out of that thing. So yeah,
Well, I
making
just want to make
mistakes.
a big
Yeah,
point
sorry, go on.
too. Yeah, yeah, no problem. I just want to make a really big point over here. It's like, and everyone can again like just realize what I'm saying here. It's like I've been trading for a very, very long time, and the amount of data that I have lost by not journaling, like I would do so much to just go back in time and just say like, all right, Josh, just put your ego to the fucking bed, excuse my language, and just do it. Like you don't want to journal the losers. It doesn't feel good, but overall, when you get into that state of mind to say, hey, listen, like regardless of what happens of the outcome, I need to just be a professional in the industry to just say that this is specifically what I need to do. And the moment you can just put that ego to bed and just say, hey, listen, regardless of a win or a loss, or even on a very bad day or a very good day, like that is such an important data collection point. And I really say this, and I want everyone to also realize this, like when you're trading, right? Like in the future, when you are really, really good at this, you're going to want to be able to pass this down to loved ones. And when you're able to just realize, okay, I got legacies to follow, I got legacies to build. And at this point, if you don't have any data, good luck trying to explain someone that. And it's like when you can like put more, let's call it raw reality onto why the journaling is so important, it's literally not only for you, it's for the people that you love and you want to share that with to impact their future. And I again, I really say this, I would do so much to get the data that I had when I was first trading, even if it was trend lines, even if it was the basic of the basic, because it would have just taught me so much of what I was thinking at that certain time. And this is the fallacy where a lot of people just say, all right, well, I remembered that trade, or oh, I have good muscle memory, or oh, I can do this. Like I can come up with a million different things that I've heard for people to say that like, oh, I don't necessarily need to trade in journal with that set discipline. But at the same time, like it's not only for you, like it's really for your loved ones as well, and it's your legacy to build. And once you start to reflect and are able to do, monthly reviews, quarterly reviews, yearly reviews, like I just want everyone to also understand if you ever have a desire to work at an institutional level, if you don't journal your trades, you're not getting your quarterly bonus. Like it's clear as day, right? So if you're not recognizing at a very high level overview to say, hey, listen, like journaling is so important. Like I just want to be able to stress this. It's like, and again, you don't have to share your journal, and like that's why I give so much credit and for the individuals that want to be fully transparent and have all of their journals fully out there, like, and that's where I give you so much credit, where it's so impressive to me, Kira, where you're able to just show everyone, be like, hey, listen, this is what I'm doing. Because again, my journal is very personal also to me in the way that I talk to myself. I have told myself about, these are the things that I'm looking for. These are the things that I messed up on. These are the days that I tilted. Like everybody's human and normal, and at a certain point, if you don't recognize the power and the impact of journal, hopefully this testimony can help.
Wonderfully said, man. Wonderfully said. I can't top that. Stream's over.
It's all love. It's all love.
All
It's
of it.
just I would do so much to really have some of that data in the
Yep.
initial points, honestly. I wish I really saw what my first initial charts looked like when I was developing. Like that's always something that I've looked back on and said, like, wow, Josh, like you really messed up not having that. And at least to like document the journey to say, like, look at my like I know that some people like make fun of their initial charts where like, oh, they were having like, let's say, like crazy colors, 100 different, indicators on their charts, and they didn't know what they were doing. But like that's the groundwork and the foundation of your initial journey. Like I would do so much to be able to just go back in time and see that. And ultimately a lot of that has just been lost. And again, I just hope that you guys can learn from what I'm saying and just do not make those same mistakes.
I think that's the beauty
It's
of a
never too
mentor,
late.
right? That's the beauty of a mentor or someone you look up to, that they're like someone like yourself. Like I would consider you a mentor because you're sharing so much information to help other people, especially people who are new. You don't want them to make the same mistakes as you, right? The whole point is for your mentor to accelerate your learning curve, right? Your growth. Like there's no need for them to fall into the same potholes that you did. That's the whole point of it, right? So credit to you for opening up about that, because it takes a lot of guts and courage to share that. I mean, every one of us knows you can just start today. If you haven't started, just start today, and you'll thank yourself a month later, because you'll have a month worth of data, and it piles on very quickly, just like compounding an account happens very quickly. When I started this thing, it was literally at the end of May. And now when I look back, I'm like, holy shit, there's been 59 trades that I've captured. Like that's a lot of time and energy, and we're only on the 25th of the month. Like there's still more days to go. So just start today. Start now. Okay? In terms of like, from the past and stuff, like I think I showed this last like I have like stuff dating all the way back to 2023, like right here. This is that back testing thing I was talking about, right? Like this is what my first charts started to look like. Like they were like this, basically. And I would, say I'm risking $1,000, and what does that look like? And what does my chart look like? Like I'll even open it up and show you. Like this is what my charts look like. This is what they look like back in October of 2023, and this is what they look like now. 2023, I got RSI, I got MACD, right? So every one of us has a different journey. Our growth, hopefully everyone's growth is in the upward trajectory, but you'll only get there when you have the data. So let me go back to this and just say one other thing. Where am I? Yeah, so, okay. So just reading one of Danielle Umbra, excuse me. So journaling influence a little bit in control, because if you're lazy, you don't want to journal 25 trades because you were over trading. Yeah. And I think when you start to journal, you have to be honest with yourself, right? Like you can't take a shortcut. And over time, by like checking yourself that way, you're actually doing yourself a favor and growing every single day, 1%. So 100% with that. And Josh, you had asked a question about like also when did kind of things get put together. Truth be told, so back when we started the first 2190 challenge, there was an awesome trader named Arrow. I'm good friends with this guy. He's such a good dude. He's a really busy dude, so he's not online as much. But yeah, shout out to Arrow, because he started this 2190 challenge inside Unicorn University a while back. I think it was last year actually, and that was the turning point, because when you are putting yourself in a challenge like that, where it's basically you versus you, but you have the tools to help you work through a lot of the challenges that you face, and a lot of the challenges you don't even realize, to be honest with you. Even now, like I'm in 2190 now, and I'm still facing challenges, new ones that I have not experienced in the previous 2 cycles that we did this thing. So I think when you go 21 days of the same routine, and granted, you're not going to be perfect in those 21 days, but the whole point is to document that. Document where you had a blip, right? Document that, because when you review later, you'll know what to go back to, and you'll see it, and you'll go, oh, right, that makes sense. I did experience FOMO there, or I did break a rule here. That is why I lost that trade. So if I can eliminate those repeatable mistakes, then they're no longer repeatable. Yeah, discipline. It starts with discipline, right? I mean, even if you're someone is going to the gym, like I myself need to do that. And in the past, I used to be a very big gym guy, and if you go to the gym like 3 or 4 times a week, Like after you go to the gym, when you come home, are you stuffing your face with pizza and cookies and chips? Like you're probably not, because it's going to negate all the work you just did, right? But if you can keep that discipline going, or you're eating clean and you're going to the gym, that's when you're going to start seeing those results, right? Storm's going to say he eats cookies and he has a six-pack. All right, so yeah, we did a lot of talking about all this other stuff here. I hope it resonated with everybody. The next thing we're going to go into now is the charts in regards to the. We could go into the charts regarding the EMC model because I was talking about it, and then we can do some. If there's time, we can do some chart review quickly of like what's happening with Bitcoin and NQ. So let
Would love
me
that,
open.
honestly.
Oh,
I got a quick
Bitcoin.
question, again for everyone, just so that we're all on the same page. How many people are still with us before we get into the charts? It's very important. I want you guys all being interactive and understanding this is where you heard the real sauce now, and then this is where, let's call it, the routine starts to kick in. So it's very, very important that you guys realize it's not like we're looking to be long-winded on things that are psychological or anything like that. It's really like this is the raw reality of trading, talking about journaling, the process, and how to actually be in the right state of mind before you can even see a chart. And again, I always give so much credit to everybody that gets on live stream that can be able to have these honest discussions before they even get onto the charts, because it really sets the full context for everybody. It's not just about pulling up a chart and explaining like the best strategy or not, because like everyone's risk parameters and their strategy is going to be different, right? So when you can see the stuff that we have in common, which is discipline, which is the journey, which is the upbringing, which is getting into the right state of mind, that's what is actually the real sauce. And that's why we bring in so many individuals that have so many different personalities inside of 2 Degrees Escape, that this is, again, this is the raw reality of trading. And we always, make it known.
Yeah, all that stuff is not sexy. Like that's not the sexy stuff. Like when we see successful people with watches or Lambos or yachts, or we see a lot of that kind of stuff, or just like flaunting money or buying clothes. Like, I mean, I'm positive there's a whole bunch of shit from the back that no one sees, which is like for people like us who are traders, like that's the data, that's the journaling, that's the mental challenges, that's the mindset challenges. Like you can fill in the blanks, but you get where I'm going with this. Like, it's not the sexy stuff, but that's what it takes. At least that's what it takes for me, and maybe others can relate to it. Some people are pretty lucky with not having to do stuff and winning, but for others like myself, like it doesn't, like winning doesn't come easy to me like that. It comes easy to me by doing a lot of this mechanical stuff. That's how it works for me. We're all different. We're all going to you know look to or strive towards greatness, but how we get there is going to look a little bit different for everybody, and there's nothing wrong with that. But I do think when it comes to the trading world, there's certain things that just make so much sense, and it is a lot of this unsexy stuff, which is the data. But that's why you can make the data more personal to yourself, right? So that it becomes more fun, perhaps, right? It could be colors, it could be the type of data you're collecting that makes sense to you, right? So I know a lot of people are doing things different. So let's get to the charts. I'll show you exactly what I was talking about. So I had mentioned the steps. So the steps were right here. I'll just put it up on the screen here again. So the first thing we're looking for is that H4 ERL to IRL or IRL to ERL. And we'll take an example from yesterday. So yesterday, New York session 10 to 2. The trade was on NQ and we went short. So let's just take a quick peek at that. So we got NQ here. I'm just going to back up to yesterday. Just go to 10. All right, here we are. And let me get rid of everything here. And we'll just go back to about here. Okay, so we did go short, I believe. That's what I said, right? Short? Yeah, we went short. Okay, so 10 to 2. Was 10 to 2. Okay. So first things first, when we're looking at our bias, and it's tricky too, because NQ has been either very, very boring and messy, or it's been very, very volatile, being impacted by a lot of the red folder events, or what Trump is tweeting and whatnot, right? So the first thing we have to do on a Tuesday when we get in, so this is that 6 a.m. candle, okay? So technically this candle doesn't exist yet, okay? So when I would get into the office or on my desk, it's 8:30, right? So 8:30 to 10 is that first window, and then 10 to 2 is the next window. So the first thing I'm gathering is like, where is price located? So to me, price is located above a H4 ERL swing high. I'm just going to mark it down like this, okay? So what that's telling me is I'm going to have a bearish bias today, because price has, in the previous 4-hour candle, actually closed right below it. So that's given me, at the time, that's giving me some confirmation. And then seeing how this candle is looking in between 6 to 10 is also giving me more confirmation that I should be looking for a short, okay? So where is the short moving to? So we have 2 bullish draws on liquidity here. We have an H4 bullish FEG here, and lock that up. And then we have another bullish FEG down here. Now, I know there's a lot of conversation about, like, you want to long from discounted FEGs and you want to short from premium FEGs. But one thing I've learned from Ash Trades is, like, and it took a long time for me to finally let go of my ego, is that if price is tagging, say, this higher FEG, like, it's good enough. You can catch a long from there. You don't have to wait for here. And if it fails here, that's fine. You lose a trade, your risk was already for. You now wait for the next one, because you don't know what price is going to do. And like he says, price is going to do whatever it wants, whenever it wants. Thanks, Solo. Appreciate your time, man. So my bias from yesterday was bearish, going from external to internal. That was all I was looking for. So that's my bias. Done. Next step, go to the 50-minute. So when the 50-minute starts, check my indicators. All right, perfect. So when the 50-minute kicks in, I need to be looking at where the bearish POIs are located, okay? So 8:30 is about here, right around here. And let me just get rid of the indicators for a second. And this is why I have this FVG indicator, because I like to just have it there. It just easily plots things, and then I can manually draw them. So at 8:30, we're down here. So if I want to be bearish, I can't be bearish down here. I need to be bearish from a bearish POI. So that's a swing high or a bearish FEG. So we do have a 50-minute bearish ERL right here. And we also have a bearish FEG right here. So I'll mark those in. So now I know where the immediate POIs of interest are, okay? And the next thing I'm going to do is go to my 2-minute time, okay? And when I go to the 2-minute time frame, I'm then now looking for whether we get alignment, right? This is that step right here. Where was it? Here. We need to have that alignment of the OHLC stat map, premium discount, because sometimes you're going to get into a situation like this where, yeah, you're inside of a POI, but we're not actually inside the premium range of the stat map. And that's a key component of this. So I need to make sure this gets tagged, or we're taking that trade in here. So technically, I'm not doing anything. I'm just going to wait. And then the other part of this is that after 4 hours, we get. So I don't really like to always take trades towards the end of that 4-hour window, because you never know what's going to happen next. But it's not to say I won't. Things look really good in how it got set up. I'll just take it because it lined up. But I'm very cautious is what I'm trying. So now that the fresh print shows up, now we can see that this premium level got lowered, and it's now more in line with where the FEG is here. Now, granted, the FVG got mitigated at 948. So I'm going to go back to the drawing board because that already got mitigated, and I'm just going to delete that, and I'm going to delete this, and I'm going to see if price is going to reach higher. And I'll also just put one up here too, because we know that the fresh print has also created a range way up here. Okay, so I don't know what's going to happen at the time. I'm not even sure even where I took the trade, to be honest with you. This is why you take data and you take notes so you can go back and review. So as time moves forward, we're going to see what happens here. Okay, so now we have tagged a premium OHLC stat map level. So that's one of the steps that's done. Our bearish bias is still intact, right? Where this is that H4 ERL that price had swept, right? So I'm still looking for that move to our H4 liquidity down here, right? To complete that move. But what I do need now is that 15-minute alignment. And I need a signal. So let's see what happens here. Okay, so now we have the 15-minute engaged. Okay, 15-minute has been engaged. We swept the swing high. So now we have our bearish bias. The 50-minute is aligned with that. Okay, we've tagged that OHLC stat map level. Perfect. So the last thing we need here is dodgy signal. And I don't know where that's going to come from. I don't know when that's going to happen. See, it's going higher. Okay, so this is part of the game, is patience. Don't just jump in just because 3 out of the 4 criteria have been met. Now, I'm just going to add this in here. You can see there is a long here, okay? And part of the patience with this indicator is like you're going to get signals that are going to go in the opposite direction of what your bias is telling you. And in this situation, it looks like this trade would have played out as a long. But I can tell you, if you're trading against the higher time frame trend, that more often than not, it's going to go against you. I've seen this countless times, and I find when I see these types of signals show up and it goes the right way, this is what creates FOMO for me. It might work for other people, but for me, it creates FOMO. So I decided to just stick to my rules, which is I have a bearish bias. I'm looking for bearish move to liquidity down there, whether it happens or not, story, but that's what I'm looking for. So price has now swept that 50-minute level. I'm just going to add the 1-3 average New York range level, which is right here. Okay. Another thing I was talking about, which is in step number 4 here. Okay. So we keep moving forward. And all day yesterday, I was looking for this short because I was looking at it from the moment 8:30 hit. Okay. And we're going to see what happens. So still no signal, nothing. Sweep it again. Let's get rid of this now because this has been invalidated, right? We've gone higher. Now, here's the thing. Let's see what happens here. I don't know if it's going to show up. There it is. Okay. So now we get this signal here. So let's go to the 15 for a second and see what that looks like. So this is what the 15-minute looks like at the time of where that signal fires off. And if I go to the 4-hour, this is what the 4-hour looks like. So most people, I think when they see this, obviously, like, does that look bearish to you? Does not look very bearish, but I try to stay consistent with the rules, the mechanics. If I'm above a swing high, I am not taking a long. If I'm inside of a bearish a bearish FVG, I am not taking a long. I need to be shorting from there. And if a short doesn't set up, it doesn't set up. I just wait. Okay, I wait for that my bias to get back to if I want to go long, then I got to wait for it to hit this H4 FVG. That's or if a new swing low is created, then I can consider that as a bullish POI. But in this situation, I'm still technically bearish. Take care, Sign Time. Appreciate it, man. People got to go follow you too, man. You're a big deal with me. Amazing, amazing work. I'm looking forward to your stream this week. So let's go back to the 2-minute and see where we're at. Now, another thing I do, which is not in my criteria there, but it is a little trick I learned from its algo, is I create these quarterly fib ranges, and there's probably some sort of ICT term to call it. I don't know what it's called, but I just call them quarterly fibs because inside of this range, it's capturing the 25%, 50%, and 75% of the range. And I really love using these. I was a big range trader price grading. There we go. So I was a big range trader when I used to trade crypto. I used to love creating these ranges. I used to love trading with fibs. And in between support and resistance of like ranges, I would create these, as Josh called them, price grading. So key things to look out for are that EQ. I really like looking out for EQs inside FVGs. I like looking out for EQs inside ranges. I find them very valuable. So in this situation, we have the the 1-3 average New York range level tagged here. We're now inside of that OHLC stat map premium level, and we've now tagged the price graded EQ. Okay, so we got like a quarterly fib setup here with the EQ being tagged, and we now have that setup, right? So the beauty of this indicator, in my opinion, is that the second this FVG is being considered as a usable signal, the second this candle starts to close through it, you're going to get one of these potential alerts. See if I can find one. So you get something like this, potential bearish DD IFVG. Okay, so you get one of these things, and then if it confirms like something like this, then you'll see it say like active. Okay, so that's the beauty of these alerts. In this situation, I would have already had a lot of things marked up and what I'm looking for, because I already know for sure that that is what I want to do. But sometimes like you're looking at MCL, or you're looking at, or you're Twitter, and you're like, oh shit, Trump just called, Powell an idiot or something like that, right? Like there's, oh, that's interesting. And then next thing you know, you missed the trade. So I love that the alerts fire off. You can also set manual alerts for yourself, right? So if I'm watching this now like a hawk, I already now know this is the FVG in question. I can already start setting up my trade. Okay, well before this thing even fires off. Now, I like to have my stop loss put at the swing point. If the FVG, or sorry, if the IFVG is relatively close to the swing point, I'll use my stop loss up here, and I'm literally just aiming for 2R. I don't care what happens next. I'm just literally waiting for 2R. So the second we get that confirmation is when the 1246 candle closes, and so when that candle closes and then the 1248 candle pops up, the second this triggers, I already have like a limit order template ready to go where I'm just hitting OK, or I'm using it on Tradeovate, right? So in this case, I've been using like challenge accounts and paper trading, so I'm just doing it through TradingView. But because I trade through Tradeovate, I'll be running that traded like I would normally run it traded through Tradeovate. So I would have my hand on the trigger with Tradeovate, keeping this screen open so I can quickly hit sell. Because sometimes it's so quick to happen, you miss it. Okay. So this would be my setup. The second this triggers, we get an entry right there, and then we watch and see what happens. Okay. And bam, just like that. I'm not greedy. I know I'm just looking for 2R. I talked about 2R a day and what that means. I don't have to trade this thing to where I think the weekly liquidity is, right? Like I told you that my bias was bearish and I was looking for a move back down here, right? So I'm not going to be greedy and try to trade this thing like that. And then obviously that's an insane RR. Apex won't allow that, but let's be realistic. That's not how to do this. When I used to trade forex, I used to see people going for like 10x, like that was standard. But I think that is a detriment to working on greed and personal greed. So for me, 2R, perfect. Take it and run. The other beauty about this indicator is it populates a sell side opposing swing. And this is based off the 5-minute time frame. That's where it's drawing liquidity from. And we can go through settings in a sec. But look, I took a 2R move right here. It took 2, 4, 6, 8, 10, 12 minutes to play out. 12 minutes to make $1,000 if I was risking $500. Okay, and I showed you the steps of how I did this and walked you through it. Okay, 2R. What happens next? Let's see. I don't know. Does it go higher? Does it go lower? And now we're into the 2 p.m. window. right? So these are things that, this is one example of that setup. And like I said, this indicator alone has filtered out so much garbage for me because I couldn't gauge, personally, I could not gauge which IFVG to use because I would have a key level taken and then I would have the 15-minute POI in alignment. And then I would have an IFVG form off of a stat map level of interest, and then it would fail. And I don't know why it would fail. I'm someone that needs to know why did something fail, and I didn't have an answer. I kept looking and looking and looking, could not figure it out. And then once this indicator came out, I started realizing that it's actually calculating the size of this FVG and weighting it appropriately based off of the settings. So here are my settings. So I like having alerts on. I like having that potential inversion alert on. I like to have the active inversion alert on. I like to have that warning, right, on the close. Now, I don't have the other alerts on, thing like a hawk, usually when it's on trade, because I know these trades can end in like 10 minutes. It could go against me too, right? And I'll show you one that happened today. It went against me, and it happened very quick. Nobody's perfect. You're never going to nail 100% of your trades. So I like to have 40 in terms of my history. I just like to see everything in the back, like in the past, so that I can quickly review it. A lot of this other stuff here is default, like neutral, swing, or sorry, single, swing. I like to use the automatic liquidity time frame, so it's pulling it from the 5-minute. If I just turn on the table, you can see that it's showing that liquidity is 5-minute. The threshold, which we'll talk about in a sec. So I also don't like to see the invalidated setups removed. I used to do that, and then I realized, where's the learning if I have them always removed? Like, I don't want to just see perfect setups. I want to see setups that also failed. That's where I learn, right? So this is a big factor for me, is keeping this off. Now, a huge adjustment I made was that I used to have this thing set like this, and I know this is very, very popular. I know a lot of people that are using this type of a setting, but this is what happens. You get tons of setups. And if you're someone that can like work through the noise, so to speak, and still make good judgment calls, then all the power to you. But this is where you have to know yourself. You have to know yourself as a trader. I know myself as a trader. I'm a crypto degen. If I start seeing setups like this, I'm getting FOMO instantly. And then that FOMO starts turning into panic when it's against me. So I need to find ways to mitigate that. The best way I can do that is to take a conservative approach. So I started testing with all these different settings, and I realized that small, medium, large suited my interest the best. The other thing is, I've talked about how, like with the unicorn, I'm a reversal trader. I'm not very good with momentum based setups, even though if we're looking at like a market maker model or like a T-Trades model, which somewhat intertwined with that, you're taking entries on that C3 candle, which is a continuation move, right? For me, I like having that no opposing sweep. That way, I'm getting like a true move where the signal will appear from in terms of that reversal, potentially. So that's why I have no opposing. So if you see, if I put momentum on, it's going to add this setup right here, right? But the reason it's adding this is because it's not accounting for the opposing sweep here, right? And I want to make sure that I'm on the line with that opposing sweep. So no opposing sweep on the bearish side, or sorry, on the bullish side that it's calculating. It's only on the bearish side, which then once again filters out garbage for me. Okay, I call it garbage, but it filters out those unnecessary trades that I don't want to see and I don't want to take. I don't need to be in those trades because it's not aligning with how I set up the H4, how I set up the 15-minute, and then what I'm looking for on the 2-minute. Everything else here is default. Don't need to touch a single thing. I've changed the label sizes, which you can do too. And other than that, like I said, it's all default. I like to just keep the chart off just because I don't need it to tell me what I already know. And I'm someone that likes to have a clean chart as much as I can. Granted, there can be a lot of lines that get put on your chart at some point. Like if I were to just back up here, we got H4 ERLs, we got 50-minute ERLs, we have average New York range, we have the quarterly fibs, aka price grading, EQ. Things can easily get very, very messy on your chart very, very quickly. So one thing I always used to tell myself was, if my chart starts to get incredibly messy, I need to figure out what are the things that are not benefiting what I'm doing. What are things that are just there for no reason? So if something is there on your chart and not serving a purpose to help you with whatever that trade setup is, like, you do not need to have it on your screen, in my opinion. Take it off. So for me, I only have on my screen what I need. Sometimes the average Nick range level won't even be part of what I'm looking for, because it's nowhere near it, right? And in those situations, I'll just turn it off because I don't need it to be there. There's no need, right? The only things I need on my chart right now for this setup are the 4-hour ERL that tells me I should be bearish, the 15-minute ERL, which gives me that bearish MTF POI, my stat map levels, because I want to know that I'm trading inside of a premium stat map range based off the 4-hour. And then I have these quarterly fibs, price grading fibs, because I know this is a key level. So I found this is a big trick, adding this in there, because if I didn't have it on, it looks like this. And by adding it on, it now just provides me a little bit more where price action is trading inside of like a naked area. I've now given myself some reasons to add to why I'm taking that trade. So I was confident to take this trade because I was bearish with my bias. My 50-minute POI was bearish. We were inside of a OHLC premium range, which I'm bearish about. But because it's naked, I added those price graded or quarterly fibs, and we tag that EQ right where that signal forms. Bam, enter, quick in and out scalp. So even if price goes completely the other way, that's fine. Like, the bias could be wrong, right? That's fine. But this trade fit my bias, and it played out. And I was only looking for 2R. Okay. And that was the only trade I took that day. 24th, one trade. Sometimes you're going to get multiple trades, right? So we'll go through a loss now, which I took this morning on GC. And I thought it was pretty textbook. I thought it was pretty clean. If anyone has any questions, feel free to drop them down there while I'm talking. But let's take a look at GC from today. So it's the same setup. Just going to go back to the 4-hour. Okay, so this is that 10 a.m. candle. If I come back here, okay, so this is our 6 to 10 a.m. candle. Okay, so right off the bat, first thing I'm doing is figuring out where is my bias. Well, we are below a H4 ERL like this, and there is a bearish POI up here. Okay, which is right there. So my bias, even though price is coming against me like this, it's retracing probably into OTE, or the 50% range, level of this range. I'm still bullish because price has swept a ERL that is bullish, a bullish ERL swing low, and I'm targeting the IRL up here. So we're looking for an ERL to IRL move. Okay, so then I'm going to move to the 15-minute. Okay, if I move to the 15-minute, the next thing I need to start looking for, because I'm bullish, is I need a bullish POI. Okay, so I'm just going to backtrack here for a sec because this is 12:30. Let's go back to before 10. Okay, because I think that's when I took this trade. Okay, so if we go back here, so 8:30, 9:15. So if I'm looking at this, I think I've taken it in here somewhere. So we have a 50-minute ERL here, which is our swing low. Let's make it thin. We have a 50-minute bullish FEG here. Okay, I think the setup was in here. I'm not sure if it was down here or not, but I just want to double check where it was. Yeah, it was there. Thought so. Okay, so all this is what happens next where the trade goes against me. But I just want to point out, I still marked out my POIs. So I marked that out. And I also marked this out. Okay. So it's one of the first things I always do when I'm kind of going with the top-down approach is I'm just anything of interest that is going to support my bias, I'm going to put it in there. So all of this is supporting my bias. What happens on the 2-minute? Have to wait and see what happens, right? So if I go to the 2-minute now, okay, this is where the setup formed, and I'll just swing this back a bit so you can see where we were. So I said my window is at 8:30, right? So that's right here. So when I logged in at 8:30, price is up here. So I already know if I'm going to go long, I need price to at least come back to this POI and tag this bullish OHLC level, or go lower into this range. Okay. So what happens next is we get something like this, right? So you get the warning that price is inside of this FVG. You get the signal here. My entry is at the IFVG, and my stop loss is at the bottom because it's fairly close to the swing point. I'm going to measure out 2R, like I said earlier. Yeah, getting more alerts. We can go through some live stuff too. And that's basically how it's set up. So technically, I would be in on this. Now, I did miss this trade. I'm not going to lie. I was putting that deck together and missed it. But I'm still documenting it as a loss. And this is kind of what I was saying in that spreadsheet that I have, like sometimes I've missed these trades, but I'm still documenting it because it is a valid trade that I would have taken. Okay. So I would have taken this trade. This is exactly how I would have set it up. I did have all these things set up on my chart when I started the morning. And we were talking about it actually inside of the EMC. We had a conversation about it. Some of us thought this was exactly what we're looking for. Some of us said, I'm not taking it because there's a massive 15-minute FVG down here, and they would rather take the long from in here. And that's amazing because that's independent thinking, and that's using some intuition and some personal judgment. For me, I'm trying to take a more mechanical approach with it, and it fit all the criteria. So, for me, I'm in. Now, you'll see that you'll see that the New York range is okay, not up here. What indicator do I use for the 50-minute FVG? I'm basically manually. Yeah, sorry, man. I don't even know how to turn the volume down on that thing. I manually draw these in, but I do use the fair value gap by Anch to just show me that it's there, and then I can just quickly map it in. The thing with me is like I like processes to be automated as much as possible to take the thinking away from me, because the more thinking I do means the more mental energy I have to use, and I want to save that mental energy for tougher decisions that need to be made. Okay. So this setup would have triggered, and within minutes, we get the warning that price has closed. That orange thing was a warning, closed below the IFVG, and 2, 4, 6, 8 minutes later, I have a stop loss. Okay, so this is an example of a loss because, like I said, you're not ever gonna have 100% wins, and like I showed with the 2R compounding component, like if we can get 60% win rate, I showed you what that looked like. That looks amazing. So yeah, you're going to take some losses. It's part of the game, right? You got to learn to lose. One book I'm still studying is a book called Best Loser Wins. And I think the title sums up exactly what I'm talking about, right? It is something I also go through in our live streams in UU, talk about some of the chapters, try to do like a bit of a mastermind at times when I have time. And we just kind of discuss, because like I said in the beginning, like the mindset is, and even what Josh was saying, like the mindset to our approach is such a big deal. 20% of it is literally the technical stuff. 80% of it is inside your head. So a lot of people, they take a loss and it sucks and it ruins their day. And it either can cause revenge trading. I mean, just taking one loss. I used to be like that. And I'm sure a lot of us were too. Maybe some of us are still like that. And it's okay. It's part of the trading journey, but you're going to have to find a way to work past that. Okay. Yeah, I mean, Josh put up a great point there, right? Reduce your leverage until you can recognize. Thing is, this is where that 2190 thing comes in, because you can if you can do this for 21 days where you're abiding by these kind of concepts to help with your mindset, like I swear to God, like after 21 days, like it really works. You will see a huge shift in how you look at the market, how you approach the market, and how you think about it, most importantly. So this is a loss. And yeah, so we've gone over through one win, went over one loss, and basically the mechanics are the same, right? I can go through some of these here. Like I took a loss during Asia, and I have said earlier, like Asia is something I should not be trading, right? But I'm still documenting it. I told myself I would just keep documenting for the rest of the month because I want to just make sure the stats are I just want to get a good quality set of stats for the month, and then I can start to optimize and then work through the next month. But here's an example that was on Monday where we took a trade. I took a trade based off of this setup, right? We had an H4 ERL, price had swept it, so I'm bearish. 50-minute POI, get the indicator, get a secondary indicator, right? My entry is literally somewhere up here. I'm targeting the lows down here, and that's another thing too. Is like, whenever you set a trade up, you gotta have a draw. You need price to reach for something. Price can't reach for something, then the trade's more often not going to go where you think it's going. So always have a draw on liquidity set up. And I usually use a 15-minute time frame. So this is the loss, right? So you can see there was this crazy wick here. I know I probably could have exited early or exited when this closed, because like that does not look good. Like you don't ever want to see that, especially when you have a long wick come down and then price closes right back minute year up. That, I mean, I already knew at that either this trade is going to go Trump or Powell to say something, or what I mean, like something, or this is going against me. And sure enough, I thought at this point, final straw is right here, and then it went against me. And some people might say, well, I'm going to exit break even, right? Because this is pretty choppy price action. So to get something like this is like a blessing, like just get out. But like I said, I'm collecting the stats and I'm trying to go, ride or die with it. -1 and let the data speak for itself, because this is all data collection. Even if I am taking on a challenge trade or a paper trade, it's still data. It's still legit trading in the sense of like I'm taking it live and I'm working through my emotions. And can you go through a trade like this and still just let it hit stop loss? Or can you go through a trade like this and not take TP? Like, these are things as a trader you're going to have to ask yourself in real time. But the only way you're going to know how to answer that is by putting yourself in these, freaky situations. So that was a loss from last night. And like I said, my stats are telling me not to take Asia session trades, and I'll show you what I mean. So if I like filter my trading window, and this is why I love Notion, because I can just quickly do this. Excel has tricks up its sleeve too, but I'll be honest, like I've never been very good with Excel. I think if I was ever going to learn about Excel, I'd have to talk to Day Trading Realty. He's done some awesome stuff with his one shot, one kill pad, with the pad sizing. Phenomenal stuff there. So he would be my Excel guru if I needed one, that's for sure. But let's go to the stats for 6 to 10. So these are my stats, like trading from 6 p.m. to 10 p.m. Like I took a ton of losses, right? 1, 2, 3, 4, 5, 6, 7 losses, 4 wins, 11 trades. Right? 2, 4, 6, 8. 1, 2, 3, 4, 5, 6, 7, plus 1. 11 trades plus 1. Right? Makes no sense for me to trade this. But if I stick to 6 to 10, 10 to 2, my results are very different. I have like 42 trades now. And like I said, I think the RR after today is probably like plus 39 or something like that. But it literally removed 7 losses off of my spreadsheet and 4 wins. Right? But you only know what you're dealing with when you collect the data and you optimize it, right? So how about London session? I do not trade London session, so I don't need to calculate for it. There's no point putting time into, like, I thought about backtracking or like back testing the session when I woke up in the morning, but then I thought I'm never trading sleeping. Like I have a wife and 2 kids. if I'm going to trade, I need to be trading from, these like a 9 to 5 type thing, right? Like during the day, because in the afternoon my kids come home from school and I should be hanging out with my family, right? Like that's family time. That's one thing I credit Ash Trades for, is like he has a insane discipline of his time management. Like when he puts time into the market and when he doesn't put time in the market, puts his time into other things like health or other businesses. And it's ingrained in my head that I should be doing the same thing. Part of the problem for me is like I'm obsessed with trading. And sometimes it's a negative thing and sometimes it's a positive thing. But I do have such a crazy obsession or passion with it that I love being on the charts. Now, granted, I'm not gonna lie to everybody. Like I also have a day, and that day job is what keeps me on my desk from 8:30 to 4:30. So I'm already on my desk anyways. So it's not like I have the time freedom or I have the lifestyle freedom to just like F off and say, hey, I'm gonna go trade in Greece today. I'm gonna trade the New York session in Greece, or I'm gonna just take a trip and go here or go there. Like I can't do that, right? 2 kids in school. So what's part of the problem is like I'm on my desk, so I'm gonna naturally gravitate to seeing like, oh, what's going on with NQ today, right? What's going on with GC? What's going on with CL? So I sound really young. Appreciate that. I'm actually 43, turning 44 later this year. So trading for me came late in my life. I know there's a lot of people here who are younger than me. I talk to a lot of people who are like in their, yeah, I'm 44. I'm turning 44. Yes, sir. There's people who, yeah, like 20s. Like I talk to people who are in their 20s, and the beauty of trading, which I love, is like age does not mean shit, right? You could be 22, you could be 19, you could be 50. Like what we're worried about in our journey is just like who's like-minded professional and who's trading successfully or inspiring us to trade in a certain way, right? Like we're all in different parts of the journey, right? So, thanks, Golden Teacher. Golden Teacher. That's like I think about those shrooms when I think of the Golden Teacher. 27. Yeah. So like, this is the other thing too, is like anyone who's in their 20s, and this is just my experience, but like if you're in your 20s and you're doing this, like good for you. Like good for you. You are so far ahead in the game. Like I can't even imagine if I was learning how to trade in my 20s and where I would be, 20 years later. So good for you. And you're gonna definitely experience these charts differently than people who are my age, because there's a part of life experience that you might not have. And I say you might not have. You might have a lot of life experience, but there's parts of you know life experience that come when you get into your 30s and your 40s that you will just never face in your 20s. And those things can also translate into learning lessons when you're on the chart in terms of how quickly you're able to adapt or adjust to situations. So, but once again, if you're in your 20s or even if you're in your early 30s, like you're so far ahead of the game. Like if you just stick with this for 5 years and focus on one thing only, like you're gonna crush it, and you're gonna be where you want to be if you can be consistent with it. So that's amazing. Yeah, I thought so, Golden Teacher. I thought so when I saw your name, man. I have dabbled. It is pretty crazy. Had some pretty wild experiences, but I am now straight edge. And actually, I will say that's another thing too, right? When you're younger, you're more inclined to spend your money at the bar. You're more inclined to, all your friends probably don't understand what the hell you're doing with trading, right? Or maybe you haven't told them. But I know when I was in my 20s, like I spent all my time in a bar. I was not working. Like I was either in the gym or like after work, or I was at the bar. And I would just get like I could just drink my face off, and you got cannabis and stuff like that. Like it's all there. What I've learned is like now being like straight edge in the sense of like completely no drugs, no booze, is that my mind is so much more clear. I'm never I never show up at 8:30 with like a cloudy head. Um, and I'm really able to like quickly think about things. Whereas before I would be kind of slower a little bit, if that makes sense. But not telling you what to do here. I'm just giving you my own personal experience, and I'm getting a little bit personal. But I do think it plays a role in this. Like we've talked about the mindset stuff earlier. If you want to be the best trader that you can be, like you have to become the best version of yourself that you can be. And no one's perfect, but that's why I say you have to try to be the best version of yourself. And it takes time to work on that and to head to that, head toward that goal. So I wish you all the best with that. And like I said, I'm not telling you what to do. You got to do what you got to do. Oh, thanks, Vic. I appreciate that. Let's see. What else did I have on the list? Go back. Did that. We did some examples. Okay, so it looks like that's the end. But I know I mentioned talking about Bitcoin. So does anyone have any questions before I go on about anything? Agree, Josh.
There was one question from Alex, and he was saying if you would be able to be kind enough to share the PDF at the end of the presentation, but he understood and recognized that it's okay that if you didn't want to, he's still taking notes and enjoying it greatly.
Okay, perfect. I actually didn't even think about that. Let me ponder on that first, and then
No
I
problem.
will. I know. I will say this. This data that I've shared here, all of this I shared inside of the Unicorn University, and I try my best. Like I do have I'm a scholar trader inside Unicorn University. That's not a surprise, but I try my best to, like I said, just share what I can. I know people have paid to be members in there, so just like if you pay to do anything, like to be a part of something, like there's got to be some value there, and I'm doing my best to try to provide value from my perspective. So all of this stuff is actually shared there inside. So I know I'm sharing it here. You can take screenshots for sure, but I kind of feel like I wouldn't be fair if I were to
No,
start
I
sharing the
totally
PDFs.
understand.
Yeah. So
Totally
just to be
understand. It's
real,
just
just to be real.
I understand that. Completely
But it's
understand.
all here. So, and this is recorded, so you can definitely snip it. So, but yeah, you get an idea of the type of things I share. And there's a whole lot of other things I share there too. But I try my best to, like I said, if you DM me, I'll talk to you. I will never DM you first. That's another thing I want to put. If we're not friends and you get a DM from me, like that's not me. It's happened to some people. So that's not me. If we are friends, then and you can expect sometimes that you might get a message, check in or something. But if you want a message, feel free to hit me up on DM, and I'll do my best to wrap with you and chat up whatever you want to talk about, like talk shop and stuff. So feel free. DMs are always open, and you can even chat with me inside 2 Degrees Discord, or you can chat with me inside the public Ash Trades Discord. Um, so yeah, I'm there. I'm even on Twitter, so I'm there. I don't have a hidden agenda or anything like that. So straight up, dude. Okay, so
Really appreciate all of that.
hey, no
I got
problem.
one point I will make because I definitely want to talk about Bitcoin because I've been
Yeah,
monitoring that asset since it's what got me indoctrinated into trading, and that's what I can basically say, right?
yeah,
So
totally.
I don't know if you saw the post, and I kind of wanted to ask you, did you see the post that I made during this week? It was pretty much an hour and a half into the open. It was monitoring basically the big gap that we were going to likely have from this week. And I noticed, because I'm always looking at Bitcoin, I was looking at Bitcoin on my watch list and looking at Bitcoin futures. And for anybody that's not aware about what I'm going to say, this is a pretty big gem. So just pay attention. Um, Basically, initially, I was looking at Bitcoin on the Coinbase data feed, and I was comparing it against the Bitcoin futures. And I was more or less already knowledgeable of this in the past because this is something that's, been a thing, right? But when the spot price of Bitcoin starts to more or less accelerate and or tip its hand against the futures price, that is a very bullish signal. And, the moment that I pretty much recognize that, you guys can go ahead and see the crypto channel and where I would have that, right? And you can kind of see that, from the initial point of the weekly open on crypto, that was more or less the low of the week. And the only way that I can kind of say this is that when insiders are going and purchasing larger amounts of spot holdings and they do not want the price to go lower, that is going to be a telltale sign of a larger expansion. So for anybody that didn't catch that and or see that, it's not going to be the last time it happens. And obviously it's nothing of 100%, but I use it as a great confluence to recognize when spot buyers of crypto will look to basically front run and or make the futures catch up. And when you can start to recognize these times, they are very, very, very strong. So,
It's this
yep.
chart here, right? This was it?
Yep.
Yeah,
So you can
I do
see,
watch.
I'm pretty sure if you zoom in right now onto that, it's either, it was 969, you have 950, and of course there is a spread on Bitcoin futures, so that's something to be mindful of. But the moment you can kind of also see, like, look at the second bar that basically happened on that Bitcoin futures chart. That's a significant, movement of gapping into that. And when you have those very large candles and they start closing on the highs and you have continued order flow, that is some sauce.
And yeah, these gaps love to be filled. Always. Do you trade Bitcoin primarily like on a lower time frame, or are you more high
No, I just monitor that
on it?
higher time frame perspective
Perfect.
because it's like that's the asset I have the most screen time on. And even before I
Sure.
went to futures, that is
Mhm.
just like my baby on the chart. I think
Yeah.
everybody has one asset that they can kind of say that's really started their entire journey, and that's what it's been for me.
hmm So for me with Bitcoin, I trade Bitcoin on the 50-minute with my Bybit futures with leverage. I'm trading unicorns on it, and similar to how I kind of trade unicorns with futures. I don't really use a higher time frame bias per se with it. I mean, yeah, I'm going to take losses, but I'm also going to take wins. I'm also more aggressive in how I manage the trade versus how I manage futures. So, like a trade like this today, I'd taken this trade and then I had closed it up here. So it didn't even hit 2R. It was like probably 1.7 or somewhere around here. I closed it here because with crypto, you just never know. And I hate leaving profit on the table when it comes to crypto. And I don't need perfection. I just need results. And I just need to make sure that if I am taking a trade, like I secure profit. And I can walk people through this, but one of the big things I use standard deviation to figure out, this is just with the Fibonacci, but this is my settings basically. -1, -2, -2.5, -4, -4.5. But what I'm basically doing is if I catch that entry on the unicorn, the second price gets to this one standard div, my stop loss comes to break even. Something I do. Sometimes it works. Sometimes price will come back down and sweep me out, and then go straight to TP. So there's a couple ways I could go about it. I have the stop loss up there, but I don't actually close until I see one candle close below. So that's another thing I also do. Um, but this is a setup I actually did take. I don't share all my wins and like I don't share all my wins publicly, or like I do share them inside the Unicorn University Discord, but I do try to show as many losses as I can. I have no shame hiding those because that's, like I said, that's where you learn, right? And I think that also shows the reality of trading. But there are wins I don't show, and this is one of them. But this is a trade I did take. If I set this up, I'll show. my perspective on the daily in a sec, but if I just set this up, I can show you what I did. Let me just get rid of all this stuff. Not sure why it's not removing. Wonder how many alerts I have. Okay, there we go. So what I use is a 4-hour and a 50-minute time frame alignment. And let's see, where did this come from? Can't even remember. The other thing is I don't use the stat map like how I use it with, say, the 2-minute model, where I would only take a short from here and I would only take. I use an approach that Juno Trading also, I think, has made PDFs and live streamed about, where he uses them more as like support and resistance type things. Like, did it reclaim the level? And if it reclaimed it, then you can take a look up to the next level type thing. So it's things like that, like concepts like that I use. But I'm primarily using POIs on the 4-hour and taking trades off of them. So in a situation like this, this was a bit of a risky long, right? Because I'm trying to think where the 4-hour was. Let me just make a line here quickly. So it would have been about here. Okay, so basically when this trade set up, we were inside of a bearish FVG right here off of this candle. We mitigated it. To me, once that's done, it's over. So whatever happens to the left now is like from here doesn't matter to me. The next key bearish level to consider for me is right here. Okay, so there's a H4 here, and there's a H4 up here, euro. Okay, so if I'm trying to figure out my POIs, the question I always ask myself, what is price currently doing? What is the most recent signature of price action currently? So to me, I thought that's right here. And part of me was like, okay, this is really deadly because we're pretty high here. But I'm like, you know what? My mechanical rules just say if you're going to go long, you go long from higher time frame POI. So we just tagged the lip of this POI. I'll go to the 15-minute, and I was just observing what was going to happen. Okay, so what I end up seeing next beyond here was we have a sweep. This. Okay. Into that lip of the higher time frame POI. I'm then looking to see where my breaker block is, which would be this series of candles. Like so. Okay. Another thing I do, once again, is I just plot that price grading, those levels. So it's coming off of the EQ. Okay, so I was like, that's great, perfect. And the other thing is just confirming that there is a unicorn, right? So you'd be looking for a FVG inside of the breaker block. Now, granted, this is going to be pretty choppy inside of here, and that's the other thing with these types of unicorns is like with Bitcoin, when I trade them, is they're going to look really ugly. Like they can look this ugly, and I'll still take it. And I'm just waiting for that price to close above it. Set my entry at the top of the breaker, set my stop loss at the low, the swing point. I'm going to measure out my standard divs from the swing low to the swing point of the breaker. So that would be the highest up close candle wick before the leg down that takes liquidity. And I'm just going to set my standard div projection. Okay, so now I know, like I said earlier, if it hits this -1 level, my stop loss goes pretty much to break even. I am targeting 2R right there. So I'll just let price do what it's going to do. So tags an entry here. And the funny thing about this was I actually caught this after. I didn't actually catch it right here because for whatever reason, I caught it right around here, I think. Somewhere in this area is when I decided to just take a risk on it, and did post the trade in some, and then I just let price do its thing. Right? So here we are now. And like I said, I'm not aiming for perfection with this. So when price at, this morning when I was looking at the Bitcoin, the setup worked out really nice. And I thought, I'm not going to get greedy. I'm just going to take my profit off the table because I'm seeing these wicks form, right? And maybe it's not going to hit my TR, but this is another question, like how greedy are you going to be, right? Like this is less than $100 away. Like this is barely any sort of percent range. Like look at this. Whoops, go back here.
Can I make a point about this? This
Yeah,
is
go for it.
extremely hard to me to kind of also talk about this. There's a concept that I learned when I was even before like I got into ICT from Tom Dante, and he talked about the concept of evolving R. And the concept of evolving R is to be seen to say is that your risk on the trade is never static, right? It's constantly changing, specifically as you can basically see as it reaches the like near the TP and or near your stop loss. And there's a point of basically maximum opportunity, and there's also a point of, let's call it like minimal opportunity. And when you can recognize that your R on the trade has now basically been to a negative standpoint, that is the clearest sign that you want to be tightening up your risk. And when you can recognize it like this, like let's just think about math as a whole, right? Like let's say I want to take 100 points out of the market, right? And I'll have a stop loss of 50 for an example. If you have your trade running to a point of, let's call it 90 points in profit or 95 points in profit, you're effectively giving up the 95 points. If you have not moved your stop, you're giving up the 95 points you're in profit plus basically your risk on the trades, which would be the original 50. So if you can basically say that now I only need another 5 points to hit my TP, then you're effectively risking 95 points in profit plus your 50 that was your original stop loss to just make another five. So like who in the right mind would ever want to basically do that, right? So it's like you don't want to be able to leave, your underlying risk the same as the trade starts to move in your direction from my perspective, right? So when you can recognize, okay, well, there's only 5 points left in the hypothetical example, why would I want to be giving up the 95 that's in profit and or the 50 that's, more or less part of the stop? So when you can recognize that ratio turns to a negative, you know, reward to risk, then that's the clearest sign, in my opinion, that you want to be looking at managing your risk. So hopefully this example is, a very telltale sign of, how I immediately think about these things. Because again, if you're 100 points away from hitting your TP and you effectively have, let's call it 1,000, point, SL, and then you're looking for basically, two or more above, then again, you're effectively risking 3,000 points just to make 100. And it's like no one with a sustained, trading model would ever really want to be able to do that. And that's why it's very important to see position management. But again, I also know very, very successful traders that also just set and forget. So you have to find out what your personality is and what makes sense to you. But the moment that someone told me that, that concept of evolving R has always stuck with me. So
That's brilliant. It really goes to show, like, if you look at it from a numbers perspective, you're now looking at things logically. You're not looking at it emotionally. And not everybody can do that. And sometimes it takes practice, but the less emotions you can have inside of the charts, I think the better off you can be. And like you said, some people will take the 2R or the -1 or whatever and just let the trade play out how it's going to play out. And, it just depends, right? Like how we manage trades. Like for me, I'm more like I've personally never looked at it that way, but it's like thinking about it, like that makes a lot of sense. I've typically in the past just kind of eyed these wicks, like I'll eye the price as it's moving. And granted, like price could just bounce from here and go higher, right? But we could also be saying like, well, has the trend changed, right? Like, have we hit? Is there a bearish CISD here or whatever, right? And well, price did break through it, reclaimed it, and gone short. But will it hold up here? if your stop loss is at break even, and that's the process, then you just wait to see if it gets hit or not, right? Or if it goes higher. Some people will actually close, maybe 50% here, keep the rest at break even, and then let that runner go, right? Because it could go higher, right? This was the ERL that I was eyeing for price to hit. So, and you got the standard divs to work with, right? So like you just never know with crypto. But like you said, you're showing that discrepancy with Coinbase with the gap, right? With the spot and the futures, like it's such a big deal. And the other thing I want to show is, so like I showed how I set this trade up. I would just say go back to the replay and see how I did it. So just aligning the H4 POI and then looking for a clear drawn liquidity for price to reach to, and then I'm on the 15-minute looking for the unicorn setup, and then I'm kind of relying on the stat map ranges as well as those quarterly fibs or price grading ranges to work off, and then if you can add other confluences to your thing, like the 1-3 average New York range, for instance, like price hit that, like that was a little bit alarming for me because I know that's a manipulation level. So you got to keep these things in mind when you're trading. This is what I'm doing with this, so I am keeping this in mind. If we go now let's go to a higher time. See what I have here. Here we go. So, I put this chart together. I just kind of kept it static, but I've incorporated a few things. First part I've incorporated to this is Fibonacci with the OTE. So I've measured, this is a weekly range I've measured from a swing low to like the swing high up here, and price came down and has literally tagged pretty much the golden pocket, just missed hitting OTE, but price closed above that golden pocket fib. So I just made some extensions then from the high here to the low, and this is kind of how I'm getting at that 1.68, 618 level, which I'm kind of targeting now. So that's one thing I've put on that chart. If I go to the daily, and I'm just going to flip charts just to make it cleaner. Let me go to this chart for a sec and get rid of all this. Another awesome indicator from 2 degrees is the DTT indicator. So this is a NAR and 9 work, and I've started studying this. Like I said, I love to learn. I'm just constantly trying to study when I have downtime, because especially when it comes to these type of horizontal levels, I'm a big fan of those, and manipulation ranges calculated over time, like through historic data. And I found their indicator to be super cool. And I know I'm kind of bouncing all over the place, but this is who I am, and this is the stuff that I got going on. It's not like it, but it is something I was looking at with Bitcoin, because I was eyeing how price has respected the indicator levels. These are the standard divs they have up here. We have the average model range, or average manipulation range projections that are here, right? AMRP. So I was like, okay, I'm eyeing this here, and it's so interesting that price has tagged that range, closed above it, which has triggered these standard divs, meaning price should be reaching higher. And we did see some sort of a correction from here. And I found it so amazing that it works out like that. And then we get a reclaim of the previous model's high, which I also found to be really, really cool, right? We have that sweep here. It's inside of a daily bullish FEG. I find a lot of those foundational concepts, which I feel like I've reiterated previously, like especially today, like with the various models, where the foundation is in that bias of external to internal, internal to external, longing from swing lows and bullish FEGs, and shorting from swing highs and bearish FEGs. I try not to overcomplicate the process too much with all these additional things that are there, because there's so many concepts to pull from. But for me, I found like keeping it so simple like this works so well. And of course, price responds after sweeping a swing low inside of a daily bullish, and now has reclaimed this level. So for me, I don't know what's going to happen. Like no one knows, but the probability to me is like if I'm going here, like I think price should be going high. And I have these levels to work with from a daily perspective. Another thing I've started using is is the OHLC stat map levels. So initially when I started using these levels, they were just with the futures, right? With like 5-minute time frame, 2-minute time frame. But I started trying the higher, like the higher time framed manipulation levels, and I got it. You know, I'll credit it's Algo again because I saw him working with this using 12-month levels, and I was like, oh, that's a pretty cool idea. And I know he likes to deal with a lot of clusters, so I thought, you know, once again, this just comes from the studying, right? Like I'm there's amazing people and amazing traders that are doing things. I want to learn off those people. So I started to look into these levels, and I just it just blew me away because I was like, wow, the price actually. I say I'm surprised, but I'm not surprised. But it's crazy to see how much respect comes to these levels, even if you don't even use POI. Like if I don't even use a higher time frame POI with Bitcoin on a daily, like this is working like clockwork right now, right? Starting from here, ping, reclaim, hits the 12-month ping, right? All of these little moves, comes back down. You got a ping here, you got a ping here, goes back up, underside rejection, retest, sweep, reclaim the level. I mean, we all speak the same language, and we can clearly see like this is like I just find this indicator to be so powerful. Um, so I've started using this in my setup with trying to examine or analyze BTC on daily. Yeah, big shout out to Joshy, man, massive. He's such a cool dude too. I love his tutorial vids and his recaps. Definitely check that guy out. A lot of my primary analysis though with Bitcoin comes off the weekly. Okay, so I will use a blank chart here, and I've been bullish with Bitcoin since, geez, way down in here because I do function with that 4-year cycle theory, where usually after a year, when the top is made, a year later we usually see the bottom, right here. So I've been running my trading in terms of spot buys literally just off the. Here's the top. 1 year later, I'm buying the bottom. I don't know what price I bought altcoins and stuff at, but it was down here. And I did sell stuff and rebuy, but I'm literally timing the bottoms that way. And then in terms of the tops, based off that 4-year cycle theory, I think it's like 2.5 years after the halving, we should be seeing like the bull cycle top, and that timeline I believe is in sometime in November of this year. Could be, where is it? November. Well, let's put it here. So I have posted charts about this in the past. Let me see if I can pull one up on my Instagram, or sorry, my Twitter. Highlighted. It's highlighted. Apologies. Let me see if I can find this because I do think it's a pretty cool chart. Sorry, guys.
In the meantime, while he does look for it, does anybody else have any questions? This has been a very, very amazing and fun and just total encompassing stream. Um, I think for anybody that's been here for quite a while, it's very rare that, I pretty much go over a 2-hour mark, but I would be lying to say that I'm not having fun. And this has been an amazing conversation, and I really appreciate Kira being here and the rest of the audience as well as staying here. Even at, pretty much past the 2-hour mark, and I think we're going on almost 2 hours and 20 minutes. So we'll give white chocolate a break over here on the recording. But but yeah, I believe that this has been an amazing stream, and I really, really appreciate everyone for being here, right? So If you guys
Yeah,
have any
Josh.
outstanding questions, definitely put it in the chat. We will be happy to answer it. But definitely go ahead, please.
Josh, after hearing that, well, thank you so much for giving me this time, man. I just tend to talk because I have, like I said, I'm so obsessed and I love all this stuff that I could talk about nonstop. So I appreciate you letting me go a little over. I think we'll end with the Bitcoin stuff, just so I put that out there. And yeah, big respect, White Chocolate, man. Appreciate the support and the recording. So, and I hope everybody can check out the replay when it comes. What I wanted to show with Bitcoin on the weekly tweet here. And this is kind of that timeline. So this is that green zone where we're looking at the profit taking. This is the halving. Currently, when I posted this back in June, we were about here. I think we're now 20 weeks away from hitting this point here, which is that November mark. And that's just the time. That's just time analysis. I have these other bands, another indicator I use, but these are just like higher time frame EMAs that are put together. But I am monitoring these levels. I did show you how I got to 140K using Fibonacci with that extension, and this band is sitting here at 147. So there's definitely something important with that level. I don't know if price is going higher. I would try to predict the price of Bitcoin in the bull cycle top. I know that's always been a thing with people. What's your price prediction? What's your price prediction? I'm more in line with the time. So for me, the time is what's important. I bought those lows, like I said, a year after the cycle top happened in 2021, because I knew the time analysis was there, and I thought if it's not broken, you just keep going with it until it stops working. So there's no reason to fix that type of idea. So I bought around here. My goal now is to sell my spot right around here at the end of the year, 2025, November. That's when this lines up. Is it going to be the top? I don't know. But I'm not going to take a chance, because that's a pretty massive move from down here to move up here. And even though the altcoins performing like shit this cycle compared to the other cycles, still a nice move to go from here to there. Granted, I've had to hold for years, but this is why I started getting into futures, because I got bored. And I wanted to become a better trader and learn how to trade with price action. And I'm sure a lot of you can also resonate with that. So this is kind of why I'm looking at that time. And then if I show this chart, so this was once again back in June. I was eyeing that trend line. Here are the monthly manipulation levels, and I believe I shared this in crypto. The 2 degrees crypto thread in the Discord about this, and price did actually bounce from here at that time, which I just thought was really cool. The other funny thing I'll say is, like, when I first started trading, I was a trend line trader, except every time I would map out my trend lines, they never worked. And whatever the guru I was studying off of would draw trend lines, but every time I drew a trend line, it never worked. I'm sure many of us have probably experienced that and start questioning, like, why do my trend lines suck, and so and so's trend line is amazing and always works out, but mine never work. That used to happen to me all the time. So I just gave up on trend lines, but I did mark a trend line here just because I am watching a trend. It is still fundamental, technical analysis at its core or its roots. So, yeah, but once again, hard time frame, stat map levels I find are insane. I like using the fractal indicator. You got a T-spot there. I do like seeing these. And then, like I showed in my other chart here, I'll go back to it, which is the DTT, which is something new for me. And I'm still studying and learning more about it, but I do find some confluence with what I'm seeing. I think it's quite remarkable as an indicator. So shout out to an RN9 again. And if I just show you what I mean, so I think it ends at 9 here. Should show me historic stuff. So like if I go way back here, okay, so this was that kind of that bear market, right? And then as price starts to evolve or emerge or start getting some life back to it, you can see it's triggering right off of that manipulation range. And then the next model starts. And where does the turn come from? manipulation range, right? I know they have these time analysis components to their indicator, and I'm still observing these, but I still do watch it because I find like sometimes they're pretty spot on. And I know Josh, who has the update with the statistical volatility indicator that also some time elements with the volume, and then like even with the OHLC stat map, they have the time components there. So it is something to look into. I'm not going to say I'm an expert at this, but I am still studying it. Like you can see here, there's a clear time here that price literally pinged right off of, right at a 2.5 level. You know, you get some bounce action here, support. Like these levels are insane. I mean, how well they're respected. You just have to kind of observe it. Yeah, and the root candles, like I didn't even, these root candles are nuts. Like even if I go back, like something like this, right? You know, if you're trading Bitcoin, like you got to break above this. And when you get that candle closure here, it's giving you some confidence that, you know, maybe there's some movement coming, right? Even though we are inside of a daily bearish FEG, it's only bearish until it's invalid. So that happens the following day. More root candles here, additional ones up in here. Right? You can see the first time it hits that root candle, we get resistance, but then it breaks it with a massive bullish engulfing candlestick. Yeah. So I've started playing around with this indicator, my Bitcoin higher time frame charts, especially on the daily, because like I said, I just find there's a lot of respect to these levels, and it can assist with how I trade them on the 15-minute time frame. So it is something that is on my radar, and so yeah.
Absolutely, absolutely wonderful. So if all the people that are here in the audience, if you guys can please, share a heart, share, your feedback of the stream in the chat. We really, really appreciate it. This has been an amazing time. And again, if you guys haven't heard about Traderxkira, today you have. So
Thanks for your time.
it's been an
Thanks
amazing.
for letting me rock, man.
Absolutely.
Can I just give a
It's
couple
been
of or a handful of shout
absolutely,
outs? Yeah, awesome,
absolutely.
man.
Go
Well,
ahead. You do what you
first
need
and
to do.
foremost, thanks so much, buddy. First and foremost, big shout out to everybody who was here with us today. I know it's gone on really long, but I appreciate Josh's time, 2 Degrees time. So big shout out to 2 Degrees. Big shout out to Josh. Shout out to Ash Trades, White Chocolate, Day Trading Realtor, all of Unicorn University, Eat More Chicken, The Legend, our CL gang, our EMC crew, and also additional big shout outs to Joshy with StatMap, an RN9 from DTT Trading Community, Picasso, who's got Atelier Trading. Does anyone know in French what Atelier means? So I'm in Canada, so I have to learn a little bit of French, but it basically means workshop and a studio used by an artist. So Picasso, play off the term with Atelier Trading. I thought it was pretty cool. Shout out to It's Algo. Also this week, we know we got Colin James, Wealth Empire, is live streaming later this week. So big shout out to that dude. He's a really good trader, and I really like how he has put his model to work. Sign of the Times is another awesome dude. Great insight with the charts and just fundamentals and things like that. Parallel Delve, big shout out to that guy because he's the new analyst in 2 Degrees. So congrats to him. And I did miss his stream yesterday because it was at 7 a.m. and too early for me. But I do hope there's a replay. And big shout out to Flux because not sure if many people know about him. That is one smart dude developing in the back. And I know he worked with DTR with the average range levels indicator, which is something I do use a lot. So that's how I know, learn about. So big shout out to him as well. Yeah. And Josh, thanks again for having me, man.